All right, another special guest, and a very special guest, Jim Rogers. He needs no introduction whatsoever. But before I go to Jim, I'm going to take the clock back with the conversation we had with Mr. Rogers. And that was not once upon a time, that was a couple of weeks ago, or I should say a couple of months ago. When Jim came on ET Now, he stuck his neck out literally and said, it's time to buy silver, it's time to buy gold. He said again, it's time to buy silver, it's time to buy gold. Now Jim, first thank you for that fantastic call. I'm sure our viewers have benefited because of that, and that call of yours has also added to your popularity in terms of being a commodity guru.
Well, look, I make plenty of mistakes, don't worry. I make lots of mistakes. Sometimes I get it right.
Well, this one you got it right, James. Congratulations. Now, the reason why we've requested an appointment with you today is silver has collapsed 10%. You are a firm believer that the long-term bull market in silver and gold is a multi-year phenomenon. So let's revisit that. Why should long-term investors in this case not worry about last night's crack in gold or silver?
Well, everybody has to make their own decisions, as I've said to you many times, but I own gold and I own silver, and if it goes down some more, I will buy more. 10 to 15% corrections are normal in any bull market. They've been happening for hundreds of years. Sure, it scares people for a while, but it gives opportunities to buy as well.
Are we in for a multi-year bull run in precious metals as well as other commodities? Because from coffee to cocoa, from orange juice to soya, everything's made a comeback, sir.
In my view, yes. You know, gold and silver peaked in 2011. It went down for 8 years, went sideways for 8 years, started going up again last summer, summer of 2019, and it's going to go on for a long time. We have big cycles in everything, especially precious metals. And if you ask me, the world is coming to an end in many places. As you know, the U.S. has added huge debt. Many countries are printing staggering amounts of money. That has always led to a loss of confidence in paper money and governments. And you know, peasants like me, they tell us not to buy gold and silver. They tell us that silver's crazy, but I'm a peasant. And all of us old peasants know in the end, gold and silver will help.
You raise a brick of gold and a piece of silver, or was it the other way around? It was a piece of gold and a brick of silver.
Well, silver is cheaper on a historic basis than gold. You know, gold is near its all-time high. Silver is still down over 50% from its all-time high. So on a historic basis, silver is cheaper. I had rather buy silver than gold right now. I will buy both when the time comes, but I will probably buy more silver than gold just because it's cheaper.
Jim, in your assessment, do you think for next 3 to 5 years or next 2 to 3 years, one should expect double-digit returns from metals and commodities, or it's a very tall order?
What you should do is watch ET. I don't know. I'm not any good at market timing. I do expect both of them to go up a lot in the next few years because everywhere in the world, countries, governments are debasing the currency. The Bank of Japan is printing unlimited, that's their word, unlimited amounts of money. The Europeans are saying they will print as much as they have to. You know what's happening in the US? Nearly everywhere is printing a lot of money. That has always, throughout history, led to people seeking protection in real assets. This is not an opinion. This is a simple historic fact. And while, as long as they're going to ruin currencies, some of us are going to protect ourselves in real assets. And gold is will make new highs again, but silver will too.
Jim, last time when we spoke to you, you also said that, look, it's a stupid idea, but I'm actually long dollar. The dollar has weakened significantly. Is your thesis still intact?
No, I still own U.S. dollars, still own a fair amount of U.S. dollars. The U.S. dollar is, terribly flawed currency. America's the largest debtor nation in the history of the world, and it's getting worse and worse every day. I mean, in Washington, they've gone nuts. But everybody else has gone nuts too. As I said, the Bank of Japan prints huge amounts of money every day. So they're all doing the wrong thing. At the moment, the dollar's having a correction. The dollar's been very strong in the last few months, as you know. Now it's having a correction. Look, maybe I'm wrong, but in my view, gold, silver, and the dollar are having corrections, and that is normal in any market.
Jim, you've always said that one should buy an asset which is under-owned, which nobody is talking about it, and which nobody is liking. Avoid pockets and assets which are over-owned, which are liked by everybody, and which have been in a multi-year bull run. So, what is your view on U.S. tech stocks? Because they are the pivot right now. That's where the market cap and all the song and dance is happening. Is over-ownership in U.S. large tech the biggest risk for financial markets?
But as you well know, U.S. tech stocks are not ignored and under-owned and cheap. They were going up every day. They were the darlings of the U.S. market and the world markets. In fact, Chinese tech stocks were going up too. So I mean, I wouldn't buy them because that's not that's not my style. I like to buy things that are down a lot and ignored. But there are people who are great at buying stocks that are moving. There are people who are fabulous at buying Apple and Amazon. I'm not one of them. But if you're good at it, you can probably make a lot of money. But I like to buy things that are ignored and cheap, like silver.
Jim, what is your observation on the way how demand has moved post the initial crisis, what we saw in the month of March and April? Things in a sense are normalizing. China is saying the right things. Some Indian companies are also claiming that things are back on track. What is your assessment? Are things indeed back on track?
Well, for many people, yes. I mean, the governments are spending staggering amounts of money. The U.S. 6 months ago was the largest debtor nation in the history of the world. Since then, they've added trillions, with a T, trillions of U.S. dollars of debt. If you give me trillions of dollars, I'll give you a very good time. And that's what's happening in the financial markets in the U.S. All of this money is being spent and borrowed and printed. It's got to go somewhere. A lot of it's going into the financial markets, and some of it's going into the real economy. That's why markets are strong. It's staggering amounts of money being printed worldwide. Is it good for the world? No. Long term, it's terrible. Even old people, this is bad for, but young people, what do they have to look forward to? 5 or 10 years from now, people are going to say, where did all this debt come from? How did this happen? They're going to forget about the virus. But all young people, everybody is going to have a huge, huge debt burden after this is over.
So Jim, in your mind, for the financial markets, what is the biggest risk? Is it trade war between US and China? Is it the outcome of US presidential election? What should we worry about?
You should worry about everything. Watch ET. You'll worry about everything if you're smart and knowledgeable. You should definitely worry about the US. There is an election in November. Both parties have said they're going to bash China as part of their campaign, and they will. That's a popular thing for the politicians now. Is it good for no, it's not good at all. China and America and everybody should be working together. But you're going to see a lot of that. It's going to lead to more animosity. The trade war may well get worse. Trade wars have never been good for anybody. Never has trade wars been good, but they may happen again, and that will be bad. You need to worry about the central government in the U.S. because they're going to spend a lot more money. The election's in November. all the politicians in Washington want to get reelected. Is that good? No. It's good for them. It's good for some people for a while. You should worry about the huge debt burden being added all over the world, not just America, Japan, everywhere. So we have to worry about trade wars. You have to worry about bashing, China bashing in the U.S. China will mainly bash China, but I mean, the U.S. will mainly bash China. They may have bashed Japan and Germany and some other people too, but mainly China. This is going to lead to more problems in 2021, 2022, as will the debt. The main thing we should all worry about is the staggering amount of debt that the world is going to face next year and the year after and going forward. It's never, ever happened in world history.
Okay. Jim, just two more questions. We'll not extend our appointment beyond that. Jim, for markets are getting convinced that a medical breakthrough is around the corner. The Russians claimed it yesterday. A few American companies are saying that we are moving in the right direction. Would you be tempted to look at beaten down tourism, hospitality, even cruise, or for that matter, other stocks, other companies which have taken a hit because of the virus?
I have bought some of those stocks for the reasons you say. I don't know if the virus will, if the vaccine will come, when it will come, but those stocks have been beaten down a lot. I know we're going to continue to fly, maybe not this month, but the world is not going to take a boat from Tokyo to New York. People will fly again. People will go to restaurants again. They will travel again. I bought a Russian shipping company because it's very anything to do with transportation has been beaten down. Entertainment has been beaten down, travel, tourism. So yes, I anyway am buying, have bought, and will buy in those areas.
So Jim, if I summarize today's interaction with a message from you is that one should own assets in this low interest rate environment, whether it's gold, equities, or for that matter silver. I will not be wrong in this summary?
I'm sorry, what?
No, I'm saying that one should, in a low interest rate regime, your advice to our viewers would be, it is important to stay invested and one should have some exposure to gold and silver, if possible, both.
Everybody should own some precious metals as an insurance policy, if nothing else. Everybody has car insurance or health insurance. You hope you never need. If you have fire insurance, you hope you never need it. But everybody should have some gold as an insurance policy. If you're good at market timing, you can time it and buy a lot and make a lot of money. But even if you just own gold as an insurance policy, please own some silver, own some gold as an insurance policy. Who knows? You hope you never need it, but you might. And you might make a lot of money.
Okay, Jim, good to have you on the show and good to get in that perspective from you as always.